But one of the things that, as we talk about the meeting, one of the things that I think is important to understand, and you mentioned the Bank of International Settlements is standing behind Project Embridge, the way that the Bank of International Settlements has done things, and I don't know if I'm reaching for this or not, but I'll give you, I guess, my take on this because it's interesting. It's interesting in the respect that in 2017, when the Bundesbank made a very public declaration after a few years of trying to get their gold back from the West, from the New York Federal Reserve and the Bank of England, it was unusual. It was unusual because gold had been falling for 6 straight years and central banks had been selling gold. Now, why is the Bundesbank making such a big deal about this was my overwhelming thought. Like, why? What's the deal? But what became more interesting to me, exponentially more so, was that within weeks of this happening, the Bank of Austria, Turkey, Hungary, Poland, the Czech National Bank, the Dutch National Bank, all of these banks followed suit, both with the New York Federal Reserve and the Bank of England. You see, forever, countries would hold their gold at the Bank of England and the New York Fed to give them access to the LBMA and to the COMEX, Western jurisdiction safety and Western rule of law. And then in 2018, after all of these banks bringing back their gold, which was strange enough, they all bought gold to the tune of more gold than combined than they did in the 60 years previously combined. Those same banks bought more gold as a group than they did in the 60 years previously combined. They doubled that amount in 2019. And then I guess if you believe it was coincidence, let's just say I don't, the BIS said, oh, by the way, all gold is now a tier 1 asset. Now that, to me, it reeks of the fact that they were warned. Get your gold, start buying it, bring it home. It's now tier 1, on par with U.S. dollars and treasuries, the only tier 1 assets we've had since the end of World War II, at least in terms of central bank money. And so that's kind of the setup, if you will, for what we've seen lately as it pertains to the new settlement currency and Project Embridge, because one thing that's been very interesting that I've noticed, and just a simple Google search will show you that over the last year and a half, these are the banks, and probably others, that have openly brought their gold back from the Bank of England and the New York Fed. Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia just a few weeks ago, Hungary, Belgium, Egypt, Senegal, Romania, Nigeria, Poland, Ghana, India. That's an interesting one. They had 100 metric tons at the Bank of England. They brought that home. It's been there since 91. And they bought 1.5 times the amount of gold that they bought all of last year, just within the first 4 months of this year, brought all that home too. Why are they bringing it home? Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa, Czechoslovakia, the list goes on. But all of these central banks brought all of their gold home. Now, conventional wisdom will tell you that's because of the weaponization of the treasury market. These banks, you remember where Venezuela asked their gold to be returned from the Bank of England, and they said, no, not going to do that. We don't like the way that you're running your country. We're going to keep it. So that's conventional wisdom, and I understand that's probably part of it. But if you look deeply at the new proposed settlement currency, the unit, which I know we'll get into, it talks about that these countries are able to mint this new settlement token using the gold held within their own borders. In other words, the gold will not need to be sent to Moscow, to Beijing, to Dubai, to a central authority, as the West has done it forever. And now each and every one of these countries will be able to hold their gold within their own borders. And we'll get deeper into that as we speak. So I think as we look at this from a mile high, I would say the BIS does things this way. The BIS will tell the parties involved, get your house in order, start doing this because things are about to change. And you missed one other very, very important part of Project Embridge. You are right. It was designed by China, Hong Kong, Thailand, and the UAE, and backed by the BIS Innovation Hub. But the fifth full member now is Saudi Arabia. And this is a platform that is not compatible with US dollars. So to see Saudi Arabia become a full participant in Project Embridge with up to 25 or 30 observational is a very big deal. And the crumbs are leading us down this path that we'll talk about. So yeah, I think this is let's call it a quickening, if you will, an acceleration of this movement, of this de-dollarization, and into a new system that potentially could indeed be backed by gold.
In recent years, there has been a quiet but profound shift taking place in global finance, one that might have flown under the radar of many investors, but should grab the attention of anyone concerned about the future of their wealth. We are witnessing the early stages of what could be the most significant financial realignment in modern history. Central banks around the world, especially those in emerging economies, have been steadily repatriating gold from Western vaults and stockpiling their own reserves. This phenomenon isn't just about moving shiny metal around. It signals a deeper, more systemic shift that has the potential to shake the very foundation of the current global financial order, one that's been propped up by fiat currencies for far too long. As Andy Schectman aptly explains, the world's central banks are bracing for something big. They're bringing gold back home, increasing their reserves, and positioning themselves for a future where commodities, not fiat currencies, reign supreme. And it all ties back to Project Embridge, a revolutionary plan designed to create a new settlement currency backed by gold and other tangible assets that could challenge the dominance of the US dollar and other Western currencies. So, what exactly is happening? Why are central banks so eager to reclaim their gold? And how does this all relate to Project Embridge? Let's take a closer look. To understand the current trend of central banks repatriating gold, we need to look back at 2017 when the Bundesbank, Germany's central bank, made a very public declaration that they were repatriating their gold from the New York Federal Reserve and the Bank of England. At the time, this move raised eyebrows. Gold had been falling in value for 6 consecutive years, and many central banks were actually selling gold, not buying it. So why was the Bundesbank so keen on bringing its gold back home? As Schectman points out, this wasn't an isolated event. Within weeks of the Bundesbank's announcement, other central banks followed suit, including those in Austria, Hungary, Poland, the Netherlands, and Turkey. Even more intriguingly, after bringing their gold back, many of these banks began increasing their gold holdings at a pace not seen in decades. In fact, between 2018 and 2019, these central banks bought more gold than they had in the previous 60 years combined. Something was clearly happening behind the scenes. And if that wasn't enough, in 2019, the Bank for International Settlements quietly reclassified gold as a Tier 1 asset, putting it on par with US dollars and treasuries in terms of its importance in the global financial system. This reclassification was a game changer. It signaled that gold was no longer just a commodity to be traded. It was once again being recognized as a critical pillar of the global monetary system. Fast forward to today, and the picture becomes even clearer. The world is moving towards a new system, one where gold will play a central role. Project Embridge, backed by the BIS Innovation Hub, is a collaboration between China, Hong Kong, Thailand, the UAE, and now Saudi Arabia. This project aims to create a new settlement currency, one that isn't tied to the US dollar and operates outside of the Western financial system. The key to understanding Project Embridge is recognizing that it's not just about creating a new digital currency. It's about decentralizing power away from the West. One of the most significant aspects of this project is that countries will be able to mint this new settlement currency using the gold held within their own borders. Unlike the traditional system, where countries stored their gold in Western vaults, like the Bank of England or the New York Federal Reserve, this new system allows nations to maintain sovereignty over their gold reserves while participating in a global financial network. This is a monumental shift. For decades, countries like Germany, Austria, and Poland stored their gold in Western vaults for safekeeping. But with the weaponization of the US Treasury market, particularly the freezing of Venezuelan gold in the Bank of England, these countries realized that holding their gold in Western vaults wasn't as safe as they once thought. The risk of having their assets frozen or seized for political reasons became too great. This explains why we've seen such a massive repatriation of gold in recent years. Central banks want to hold their gold at home, where they have full control over it. And with Project Embridge, they now have a way to use that gold as a backing for a new global settlement currency, one that operates independently of the US dollar.
It means that it needs to be higher in terms of its dollar price, for sure. I mean, and we've had the head of the Dutch National Bank talk about this for quite some time. And ironically, in fact, you can't make it up, Michelle, gold is held on central bank balance sheets and accounts called the gold revaluation account. And, you know, the head of the Dutch National Bank says, look, we got all this money in the revaluation account that we currently cannot offset against our liabilities, but why don't we revalue the price of gold and do just that? Because in Europe, gold is on everyone's balance sheet at 35 bucks an ounce. In the US, it's 42.22. I would guess they valued it last and did some legal declaration sometime in the early 70s, right after they set it free from its $35 an ounce price. But that is what it is on the books of the US government. And, you know, it makes a lot of sense, actually. And we saw that with Roosevelt over my shoulder there. That's what he did. He confiscated gold, he revalued it, and by 40% by depreciating the dollar. And it takes on a greater significance in my mind when we see Cynthia Lummis, the senator from Oklahoma or from Wyoming, who got up on stage at the Bitcoin conference just a couple months ago in Tennessee, where Trump said, "Yeah, I want to build a Bitcoin strategic account," and she said, "Yeah, I want to float a bill that revalues the gold that the Fed is holding on behalf of the Treasury to a level high enough to buy Bitcoin for this account." And, you know, in a world where, and by the way, Luke Gromen is one of the smartest human beings on the planet. I try and follow everything that he says, and I agree with him. But in a world where Bitcoin, and, you know, Michael Saylor, I think I've watched that interview you did with him. He'd be the first one to tell you it goes to 150,000 or 200,000 or a million. Right? So why can Bitcoin go to 150,000 but gold can't? Why do we think that's okay and the other isn't? And I would just simply say, you put gold at $150,000 an ounce, as crazy as that sounds, your balance sheet now is pristine. It goes from putrid to pristine like that. And who's to say we couldn't do it? We'll just tell every country on the planet, send us your gold, we'll buy it. We'll pay 150,000 an ounce for it. That is what it is. I mean, in China right now, silver's $4 an ounce higher than it is in the West. That is what it is if you can deliver it there. My point is, if they did that, and they did that, it would behoove who? Well, all the central banks. They're the ones buying it all. And if it is indeed going to be part of a new system, and we're trying to put all of these systems together, a common system, as we were talking about, wouldn't it benefit the common system if it's all going to be tied to gold and blockchain? Then it would benefit everyone. And now you not only have a balance sheet where all of your money is not going to exponentially increasing interest payments, but instead to maybe trying to pay down the debt. Yes, it creates inflation, but it will never come back down at that point. That's why guys like Jim Sinclair, God rest his soul, always said, gold will go to a level no one thinks possible, and it will be pegged to a new system and never come down. I mean, I think that is what will happen. I think it's too hard to ignore. You know, Richard Russell always said, inflate or default, that's all the Fed can do. For the last 4 years, I said, find a villain. Xi Jinping and Putin and OPEC, they did it to us. And they incentivizing them to dump the dollar as the reserve currency. We've talked about what that looks like. But how about option 4? Just simply revalue the gold holdings if they really are there, the 8,330 metric tons that haven't been audited forever, and revalue it to a level that then makes our balance sheet balanced with, you know, the liabilities with our now higher asset level, and it's a different game. Could that happen? I think if Trump beats him to the punch, if Trump were elected and they beat him to the punch, beat the West, the East, or the South, rather, the BRICS, to the punch of currency revaluation and tying it to gold, that is how it would give us, I think, an advantage. It would give us, it would neutralize perhaps much of the world's desire to move away if indeed we showed, here's the new deal. We realize we've made a mistake. We realize we've kind of squandered the good graces of our foreign creditors, and we're going to make up for that by going this way because we've gone too far down the line to really pay it off. So we're going to revalue gold. We're going to honor that price. We're going to peg it to a new system, and it will be transparent for everyone to see. These transgressions will never happen again.
The global financial system is on the brink of a monumental shift, with central banks repatriating gold, Project Embridge gaining momentum, and precious metals poised to play a pivotal role in the future of money. But what does this mean for the average investor? How can you take advantage of this seismic shift and protect your wealth as the world transitions from fiat currencies to a commodity-backed system? In Part 2, we'll explore these questions in more depth, focusing on the long-term outlook for gold, silver, and the emerging global financial order. One of the most striking trends of the past few years has been the aggressive accumulation of gold by central banks, particularly those in emerging markets. Countries like China, Russia, and India have been quietly stockpiling gold, moving away from U.S. treasuries and other fiat-based assets. But why? To understand this shift, we need to look at the broader context. The U.S. dollar has been the world's reserve currency since the end of World War II, but its dominance is now being challenged. The BRICS nations, Brazil, Russia, India, China, and South Africa, are working to create a new monetary system that is based on tangible assets, not debt. And gold is at the center of this new system. The reason for this is simple. Gold is real money. It has intrinsic value, unlike fiat currencies, which can be printed at will by central banks. In a world where trust in fiat currencies is eroding, gold provides a stable, reliable store of value. But it's not just emerging markets that are accumulating gold. Western central banks, too, have been repatriating their gold from foreign vaults. Germany, for example, made headlines in 2017 when it announced that it was bringing its gold back from the New York Federal Reserve and the Bank of England. Other countries, including Austria, Hungary, and Poland, followed suit. This repatriation of gold is a clear signal that central banks are losing confidence in the US dollar and other fiat currencies. They are preparing for a future where gold plays a central role in the global financial system. At the heart of this shift is Project Embridge, a new global settlement system being developed by China, Hong Kong, Thailand, the United Arab Emirates, and Saudi Arabia. Backed by the Bank for International Settlements, BIS, Project Embridge aims to create a new digital currency that is backed by gold and other commodities. What makes Project Embridge so revolutionary is that it allows countries to mint their own digital currency using the gold they hold within their own borders. This is a stark departure from the current system, where countries store their gold in Western vaults, like the Bank of England or the New York Federal Reserve, and rely on the US dollar for international trade. Under Project Embridge, countries will be able to bypass the US dollar entirely, settling trade directly with one another, using a digital currency that is backed by real, tangible assets. This new system is not only more stable than the current fiat-based system, but it also gives countries more control over their own monetary policy. For investors, this is a game changer. As the world shifts away from fiat currencies and towards a commodity-backed system, the demand for gold and silver will skyrocket. Those who hold these precious metals will be in a prime position to benefit from the revaluation of these assets. While gold often gets the spotlight, silver is the real sleeper investment in this new global financial order. As Andy Schectman has pointed out, silver is currently one of the most undervalued assets on the planet. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is currently at historically high levels. This suggests that silver is massively undervalued relative to gold. But why is silver so undervalued? The answer lies in market manipulation. Western banks, particularly those in the US and Europe, have been artificially suppressing the price of silver for years. They do this through a process known as rehypothecation, where the same asset is sold multiple times, distorting the market and keeping the price artificially low. According to Schectman, the London Bullion Market Association, LBMA, trades an astonishing 2.9 billion ounces of silver per day, more than 3 times the annual global mine supply. This level of rehypothecation has distorted price discovery, masking the true value of silver. But this manipulation can only last for so long. As countries like China, Russia, and India continue to accumulate silver, the pressure on Western banks to deliver physical silver will increase. When the day comes that these banks can no longer meet delivery demands, we could see a dramatic spike in the price of silver. For investors, this represents a once-in-a-lifetime opportunity. Silver is currently trading at a fraction of its true value, making it an ideal investment for those looking to protect their wealth in the coming financial reset. As the global financial system transitions from fiat currencies to a commodity-backed system, the value of gold and silver will need to rise significantly to accommodate the new monetary framework. In Europe, central banks are currently holding gold on their balance sheets at a value of just $35 an ounce. In the US, the official valuation is slightly higher, at $42.22 an ounce. But in the real world, gold is trading at over $1,900 an ounce, and many analysts believe it could go much higher in the years to come. Some analysts, including Schectman, have suggested that we could see a massive revaluation of gold in the near future. Imagine if central banks around the world decided to revalue their gold holdings to reflect its true market value. This would instantly improve their balance sheets, allowing them to offset their liabilities and create more headroom for government spending. This isn't just speculation. History shows us that governments have used gold revaluation as a tool in the past. In 1933, President Franklin D. Roosevelt confiscated gold from U.S. citizens and revalued it by 40%, effectively devaluing the dollar and stabilizing the government's finances. In the current environment, where fiat currencies are losing value and debt levels are skyrocketing, a similar revaluation of gold, and potentially silver, could be the only way for governments to restore confidence in their financial systems. So, what does all of this mean for individual investors? The answer is clear. Now is the time to accumulate gold and silver. The global financial system is shifting, and those who hold precious metals will be in the best position to preserve their wealth as fiat currencies continue to lose value. Gold and silver are not just investments, they are forms of real money. They have intrinsic value, unlike fiat currencies, which can be printed at will by central banks. As we move towards a world where commodities, not debt, are the foundation of the financial system, the value of gold and silver will rise exponentially. For those who are skeptical, consider this. Central banks around the world are already accumulating gold and silver at record levels. They know what's coming. The question is, are you prepared? As Andy Schectman says, the time to act is now. Don't wait until it's too late. Start building your position in gold and silver now, while prices are still relatively low. When the revaluation comes, you'll be glad you did. In conclusion, we are on the cusp of a new era in global finance, one where fiat currencies take a back seat to real, tangible assets like gold and silver. This shift is already underway, and those who are prepared will not only protect their wealth, but potentially see significant gains as the value of these precious metals rises in the years ahead.